Welcome to our exploration of how the economic environment impacts organizations. In today's interconnected world, understanding economic systems and policies is crucial. We'll delve into resource allocation, fiscal and monetary policies, and competition laws. Join us as we uncover how these elements shape business strategies and consumer behavior. Let's begin this insightful journey into the economic landscape. Economic systems are frameworks that societies use to allocate resources. These systems determine how goods and services are distributed across a country. We have command, free enterprise, mixed, and transitional economies. Each system offers a unique approach to managing resources. Understanding these systems is key to grasping their impact on organizations. In free market economies, resources are allocated through market forces. Consumers dictate what to produce, while producers decide how to make it. This self-directed approach is driven by purchasing power. The interaction of consumers and producers is central to this system. Let's explore how this impacts business operations.
Command economies rely on government allocation of resources. The state directs resources to meet specific needs. This system can efficiently coordinate resources during crises. However, it may lack the flexibility of market-driven systems. Understanding this system helps in analyzing its advantages and disadvantages.
Mixed economies blend market forces with government planning. They feature both private and public sector resource allocation. This system is common in many countries today. It balances the efficiency of markets with government intervention. Let's see how mixed economies influence organizational strategies. GDP and GNP are measures of economic size. GDP focuses on domestic production, while GNP includes international activities. These metrics provide insights into a country's economic health. Understanding them helps businesses align strategies with economic conditions. Let's dive into these crucial economic indicators. Public finances are vital to a country's economic stability. They include tax receipts, government spending, and borrowing. The COVID-19 pandemic significantly impacted public finances. Understanding these changes helps in navigating economic challenges. Let's explore the dynamics of public revenue and expenditure.
Tax systems determine how individuals contribute to public finances. They vary based on income levels and personal allowances. Understanding tax structures is crucial for financial planning. These systems impact consumer spending and saving behaviors. Let's examine how taxes influence economic activities.
Corporation tax is levied on company profits. The rate depends on the amount of profit made. This tax impacts business decisions and investment strategies. Understanding corporation tax helps in aligning business goals with fiscal policies. Let's explore the role of corporation tax in the economic landscape.
Inflation reflects the rate at which currency value falls. It leads to rising prices for goods and services. Inflation impacts purchasing power and economic stability. Understanding its causes helps in managing its effects. Let's explore how inflation shapes economic decisions.
Understanding the balance of payments. The balance of payments records money flow into and out of a country. It includes the current, financial, and capital accounts. This metric helps in understanding a country's economic interactions. Analyzing the balance of payments aids in strategic business planning. Let's delve into this crucial economic indicator. Resource allocation varies across economic systems. Free markets use consumer demand, while command economies rely on government decisions. Mixed economies blend these approaches for efficiency. Understanding allocation methods helps in strategic planning. Let's explore how resources are distributed in different systems.
Fiscal policy involves government spending and taxation. It influences economic growth and consumer purchasing power. The policy aims to stabilize economic cycles. Understanding fiscal policy helps organizations align with economic trends. Let's explore its impact on business activities.
Fiscal policy stimulates growth and controls inflation. It aims to stabilize the economy during recessions. Governments use it alongside monetary policy for economic balance. Understanding its purpose aids in strategic planning. Let's examine how fiscal policy supports economic stability.
Government spending influences economic output. It involves purchasing goods and services for public use. This spending has a multiplier effect on the economy. Understanding its impact helps in strategic business decisions. Let's explore how government expenditure shapes economic activities.
Taxes affect consumer income and spending. They are a tool for fiscal policy to influence economic output. Changes in tax rates impact business and consumer behavior. Understanding tax dynamics aids in strategic planning. Let's explore how taxes shape economic activities. Transfer payments include welfare and unemployment benefits. They influence consumer income and spending habits. These payments are a fiscal policy tool to stabilize the economy. Understanding their role aids in economic planning. Let's explore how transfer payments impact economic activities.
Monetary policy uses interest rates to achieve economic goals. The Bank of England manages this policy in the UK. It aims to control inflation and support economic growth. Understanding monetary policy helps in aligning business strategies. Let's explore its impact on the economic environment.
Monetary policy targets low inflation and stable growth. It supports sustainable economic development. The policy is crucial for maintaining employment levels. Understanding its aims aids in strategic business planning. Let's explore how monetary policy supports economic stability.
Monetary policy is set by the Bank of England's MPC. They adjust interest rates to meet inflation targets. This influences borrowing, spending, and saving behaviors. Understanding its workings helps in strategic decision-making. Let's explore how monetary policy shapes economic activities.
Understanding quantitative easing aids in strategic planning. Quantitative easing involves creating money to buy assets. It's used to increase money supply and stimulate the economy. This policy helps avoid deflationary pressures. Let's explore its role in the economic landscape. Tight monetary policy raises interest rates to curb inflation. It's used when the economy grows too quickly. This policy reduces consumer spending and investment. Understanding its impact aids in economic planning. Let's explore how tight monetary policy influences economic activities.
Competition policy promotes market efficiency and consumer choice. It prevents monopolies and encourages innovation. Understanding this policy helps in strategic business positioning. Let's explore how competition policy shapes market dynamics. Thank you for joining us on this journey through the economic environment. We hope you gained valuable insights into how economic systems and policies impact organizations. Stay informed and strategic in navigating the economic landscape. Until next time, take care.